Welcome back. You're watching Your World at 10. Now, the Berkshire Hathaway Annual General Meeting is an event that thousands flock to every year to hear Warren Buffett's prognosis on his businesses and therefore on the larger U.S. economy. In this interview with CNBC's Becky Quick, Buffett says that economic and business activity that he's witnessed in the last few months is quite remarkable. Here's an excerpt of that conversation.
Warren, you look at a lot of different factors in the economy. This is a particularly difficult time to try and figure out what's going on. Where do you think we stand right now in the economy?
Well, I actually, it may not be quite so difficult. A couple of months ago when we talked, I said we were seeing little bits of improvement here and there, but it was pretty spotty. In the last couple of months, in most of our basic businesses, we have seen real strength. So the economy has picked up, I think, a lot of strength in March and April. It hasn't been, won't be translated into huge changes in unemployment soon, but the economy is starting to move.
Where do you see it? Which businesses?
Well, we see it particularly in our businesses that supply other businesses across the spectrum. Now, ISCAR, we sell these small cutting tools that are used in big machine tools, that whether it Boeing or General Motors or heavy industry all over the world. And we have seen a really huge pickup in March, started in December. It was gradually improving just a little bit, and it really has taken off. And we have a company that handles the distribution of electronic components down in Fort Worth. It sells all over to everybody in sight. It has been booming. I mean, it's huge. We're glad we've got inventory because it's flying out the door, and that's going to thousands of customers all over. So there's been a real change in the last few months.
This is more than just rebuilding inventories?
Yeah, it is more than that. We can't rebuild our own inventories because it's moving so fast. And I know it's much more than nobody wants a big inventory of cutting tools or even these electronic components, because they're putting them into products right now. They're manufacturing right now. So there's a big pickup. I don't mean we're back to where we were 3 years ago or anything of the sort, but the economy is moving. Incidentally, that's what I would have expected in this world. I mean, the American economy is an amazing, it's an amazing engine of growth over time. And we may try to mess it up from occasionally, and we go to excesses and we make mistakes and all of that. But if you look at the history of the country, I mean, this country works. It's a mistake to bet against it.
Is this a sharp V snapback recovery?
It's a pretty big snapback. I don't know. V conveys sort of something you get right back up to the top very quickly, but it's a long way. It's very different than some saucer-like thing that is very elongated. It's a real movement.
We talked to Mohammed El-Arian, and you know him from
Yeah,
PIMCO.
sure.
He's got a theory that PIMCO has been focusing on about the new normal, about consumers not going back to the same ways of spending. They've got a lot of debt that they've taken on. Their house prices have not come back. Is that a fair and valid assessment of the economy as well? And how do you match that up with what you're talking about?
Well, for years, what you might call the normal was just leveraging up more and more. So it was getting to new higher layers. And I don't think that's going to happen. But consumers, you know, the ones that can handle it like to spend. I mean, we saw them this weekend at our furniture store. In a week we sold $35 million worth of goods. That's a lot of goods to move in Omaha, Nebraska in a week in a home furnishing store. We saw a lot of jewelry sales. And the American public over time is going to spend money. What we don't want them to do is to keep leveraging up like they did, and everybody refining houses, taking money out of their house and using it to consume. But I don't think you have to worry about the American consumer over time.
Not worry about them over time, but you just mentioned that you don't think the unemployment picture is going to improve drastically anytime soon.
It takes a while. I mean, we are net hiring people at Berkshire. Last year we were letting people go every month. I don't know toward the end of the year exactly the figures, but now we're hiring people. But when they talk about jobs, we have jobs when we have demand for our goods. I mean, we're not going to hire somebody to stand around and just so we can. And so the best jobs program is demand, and demand is coming back, and that means we hire people.
Over the weekend, you said that if you had to bet your life on either higher inflation or lower inflation, you'd take higher inflation and potentially much higher.
Yeah, we are following policies which will lead to inflation, accelerating. I mean, there's no question about that. The question is whether we will change those policies before, you've lit this fuse. Basically, it's a long fuse, and you can change policies and therefore blow out this fuse that's going toward the dynamite. But if you don't, the dynamite it'll get to the dynamite eventually. And countries that borrow larger and larger amounts of money in relation to their output in their own currency, pretty soon, at some point, decide that they don't want to pay it back with currency of the same purchasing powers. And the problem about inflation is it creates its own dynamic once it gets going. And we had that in the late 70s, and it took Paul Volcker, and a meat axe to stop it. And he was probably the most unpopular man in the United States for a period of time. But we got to 15% or so interest rates for governments and a 21% prime rate. And if Volcker hadn't come along, who knows what would have happened. So, you don't want to play around with inflationary dangers.
We are watching what happens when it's not addressed play out right now in Greece. There was an agreement over the weekend that the IMF and the EU will be stepping in to make those loans. It will come with some very strict austerity measures from the Greeks. But there are people today that are saying it still won't matter. It still won't be enough. The contagion will continue to spread. And at the end of the day, this is just a Band-Aid on a problem that will continue to fester. What do you think?
Well, it's hard to tell. I mean, you've got this unusual situation in the European Union where individual countries are sovereign in determining their own budgets. They may get pressured by others, but they're sovereign in terms of their budgets. But they can't print their own currency. We can print our own currency. We can always pay our debts in the United States as long as we borrow in dollars, and we'll just keep printing more dollars. The Greeks can't do that, or other members because they're tied to the euro, but they determine their own budget. It's going to be very interesting to see how this plays out, because if you can sort of behave irresponsibly as one member and expect the other members to bail you out, that's an inducement. That's a real inducement for everybody to not behave so well. So I don't know how it's going to come out in Europe.
What about Portugal and Spain and even potentially Italy?
Yeah. Well, I don't know the countries involved, but you can say every member, once one member sort of gets away with misbehaving to some degree in terms of their own budget and others bail them out, that is the ultimate in moral hazard. That's what we talk about all the time in this country, and it's happening on a big scale in Europe. I don't know what will happen there. It's going to be an interesting movie to watch, but I don't know the ending.
Hi, that was Warren Buffett talking about the state of the American economy and the situation in Europe. Buffett also reaffirmed his faith in the beleaguered Goldman Sachs and its CEO Lloyd Blankfein. Remember, Buffett made a $5 billion investment in Goldman in the year 2008. Here's what he had to say about the SEC investigation and the future of Goldman Sachs.
When I buy something from them, they may be selling it for a customer. They may be shorting it for me, shorting it to me. It's not their responsibility to manage my money. I can hire them to manage my money if I want to, but I don't. And I often buy something from them that my guess is that they're shorting to me. But that's the name of the game.
Some people would say you're defending Goldman Sachs because you have a major investment with them. You're talking your book.
Yeah.
What do you say to them?
Well, I'm saying you're asking me the questions, so I'm responding to your questions. But I am talking my belief, and we do have a major investment in them, and if you put $5 billion in the company, you ought to feel pretty good about it. And we felt pretty good about it when we did it, and we feel pretty good about it now.
Do you think Lloyd Blankfein should continue in his job?
Absolutely. I'd rather have him running it than anybody else.